Pressure points, our topic is Nvidia's $5 billion investment in Intel. And as of this recording, which is about 45 minutes after the market opened, shares of Intel are up 25%, been holding relatively steady there. Shares of Nvidia up about 2.5%. That compares the NASDAQ up about 1%. So market clearly viewing this relationship as favorable. I'm going to first start with the conclusion, which is I think that this is an overreaction on Intel shares. I don't think they should be up 25%. I think they should be up more like 5 or 10% on this. But that's the pressure point, the punchline. I'm going to tell more after I go through, talk about first, why NVIDIA wants to do this, what's in it for Intel. Second, what does this mean for NVIDIA's overall business? And third is what's the financial impact? And so for starters, why would NVIDIA invest $5 billion to get about a 4% stake in Intel? And the answer comes down to the consumer. And when it comes to accelerators and the consumer, which are basically GPUs for another word for GPUs, but that consumer market is something that has not been on the table for NVIDIA. And so when you think about their business, of course, it's hyperscalers. That's about 2/3 of their total revenue comes from basically 8 companies, but the consumer has not been part of it. That business for Intel, it's basically the PC business, is was about 30 billion last year. Some years it's up a little bit, some years it's down, but 30 of Intel's overall 53 billion in revenue. So to give a point of context, the consumer is the biggest and most important part of Intel's business. They, of course, have been desperately trying to get more into NVIDIA's business, that has not been successful, but Intel's bread and butter is the consumer. So by NVIDIA investing in Intel, it is a win for NVIDIA because they get access to the consumer. There must be some way that they benefit. Maybe it's just straight up their equity improves if they can help them a little bit by improving the quality of the products for consumers. If they get a 10% benefit from that, something like that. But that may be kind of the benefit for NVIDIA. It also is just a good look for NVIDIA, for them to be standing by the White House and their ownership and showing that big U.S. tech companies want other U.S. tech companies to succeed. What's in it for Intel beyond the stock moving up as much as it is today is that this is some closer to a company that has been wildly successful, as evidenced by the over $4 trillion market cap. Intel's market cap is about 150 billion. So we're talking orders of magnitudes difference in terms of the success. And I think Intel wants to get access to some of that some of the smarts at NVIDIA to try to help them navigate their business. So that's kind of what was in it for each of them. The second topic is just what does this mean for NVIDIA's bread and butter business? And I think the answer is it doesn't mean anything for it. And in fact, that NVIDIA would have never invested if that $5 billion was effectively a lifeline to save Intel, if they felt that Intel had the chops to compete in their bread and butter business, kind of that high-end chip business. And so safe to say that this is not Microsoft throwing Apple a line back in when that was late 80s, early 90s. This is a very different scenario where that NVIDIA doesn't see this risk related to somehow lighting a fire under Intel's kind of more corporate business. The last piece is financially, what does this mean? And if you look at the $5 billion investment, the clearest way that NVIDIA can benefit is if Intel stock goes up. Stock's up 26%. That's a good return on investment right there. It is small when you look at the context of the numbers that NVIDIA is trying to move, though. And so I talked about that $30 billion consumer market. And if somehow NVIDIA would create a relationship that they get 10% of the value of that business, that would be $3 billion a year. I'm just hypothetically, if there was something beyond just the straight investment. $3 billion a year would be just over 1% of their revenue in calendar 26, NVIDIA's revenue. So numbers are pretty small. This is largely headline related, and the markets like what it's seen. I mentioned at the top that I felt that shares of Intel were reacting too positively on this. And I just want to say another piece on that is, if you look at the substance of this, this isn't going to dramatically change their consumer business by up 26% overnight. But I think that it does kind of more, I wouldn't say it's solidified yet, but is further evidence that Intel is becoming a meme stock. It's a US company. It's a company that long time was a darling, and I could see the meme stock status kind of gravitating around the kind of the history of Intel, the investment from the White House. Now we have Nvidia stepping up. And so, the stock is up, call it 30%, 30% year to date. It's not this vertical meme stock, but it's starting to show some of the signs that may be in the works. On behalf of Pressure Points, I'm Gene. Bye for now.